In this episode, we will discuss how to trade the open and why this is so difficult. And at the same time, I will give you a solution and a tool to survive this and master it going forward. So let's look at opening patterns right away. So this price action, making lower highs and lows into New York Open. This is New York Open. Let's see what it does. Everything looks bearish, people trying to short it. Pushing down, people going into shorts, of course. Now it's pushing down and dumping to zero, right? What happens? They immediately pull it up, stop everyone out. People thinking, oh wow, now it's going long. I thought it was short, but now it looks really long. Probably it just reverses here and goes to the moon. People going long, what happens? Pushing down, stopping everyone out, dumping. So how to trade that? That's the question. Another one. Price coming into the open, sideways, coiling, exploding to the upside. 3 bars up. Now it looks like it really would follow through. People going long, but it's stalling, pulling down, stopping everybody out. If you follow my channel, you know that I'm strongly looking at time rotations. So we really look at every hour, every half hour, every 15 minutes and see what the pattern is and the reaction at that times. And especially we wait for equity open to hit. So this is a potential entry with equity open, but the better entries are into third hour. So there is volume hitting the market. There's a 9:45 rotation that's typically pivots in one direction, or very often, and then we get 10 o'clock rotation. And this time period here, from equity open to 10 o'clock, this 30 minutes, I use for my open box approach. I will show you what that means. So I will never or very rarely enter the market here. It's absolutely advisable to wait for 10 o'clock to let all this liquidity and volatility hit the market, then look at the structure and then hunt for the classic entry points with time rotations into third hour. 10:05, 10:15, 10:35, 11:05. So how do we read that? And how do we look at the market with my tool, Trend Predator Open Box, that really helps you to read the market? It's a free indicator. Description is in the description box and the link, and you can just download it and use it for yourself. So how can we read this situation and what is my approach? My approach is the open box. The open box approach is derived from a classic open range breakout approach, but with some more elements. Let me show you. So this is equity open. From equity open, I draw a box along the first 30 minutes and extend this to the right. On top of that, I have the first hour high and low as a range on the chart. And then I have the open level. So here is the New York open level extended to the right. And I have the open anchored VWAP. And then once the open box is printed, I look at the open box 1x range expansion down here. All of that, what you see here, is automatically drawn on the chart by my indicator, Trend Predator Open Box. So let's see what we do with that. So this first hour high and low gives us the range of the futures market. So we have with my multi-time frame approach the opportunity to see what price is doing to this range. So here, for example, it's breaking down immediately. That's bearish already. And then from there we see this is the box. So the box pulls a range until down here. And we see here the anchored VWAP. The anchored VWAP always shows us who is in control, buyers or sellers from a certain time frame or certain point in time. And here, of course, equity open is a strong volume impact, and from there we want to see what's going on. So here you see pushing down, printing the low of the open box, working back into the VWAP, undecided, buyers and sellers, then breaking away from the VWAP, that's bearish, losing the open box. So this is for me the typical entries I'm looking at. So this was a trap. Then we retest the VWAP and then we lose the open box. And once we do that, this is my entry. Looking for an open box, one full range expansion. And many of you know, as I always look at formations where we have a trap at the high, trap at the low, and then one full range expansion. And this is what happens all the time, that then price, once it's broke down, reaches one full range expansion and then pulls back to the VWAP or rotates to the other side. So these are the elements. First hour high and low, open box, VWAP, one full range expansion, opening level. The opening level we want to monitor because there is the major volume impact. So very often the traders that are in profit here, shorts in this case, are revisited and taken out. So this is the tool and this is the logic. So here you see first hour coming into equity open, coil, very narrow coil, equity open, blowing off to the top. 30 minutes, build the open box. Then it works into the high of the open box, the 3 wicks outside, and then 10:35 time rotation, switch candle turning down, losing the VWAP, falling down to the other side of the open box, then working the low, coming back into the open box and coming all the way to the high of the open box. There you see how this structure nicely helps us. Here one more, coil into the open, open breaks out, bullish as breaking out of the first hour high and low, pulling back, working into the high of the open box, retesting the VWAP, then breaking out with time rotations 10:30 all the way to the open box 1x. Here a real nice reversal situation, first hour high and low, relatively wide, open box, printing a low and a high, pulling back in, trading inside the open box, here is the VWAP, then retesting the high one more time, time rotations, collapse, losing the VWAP, losing the open level, losing open box low and first hour low, and then going into multiple range expansions. So you see, if you wait for what price is doing to the open box, then you don't go long here because it never convincingly breaks out of the open box high. But then you get a fake out high, reverses down, break down, and then you go into a range expansion away from the open box. Common patterns. What are we looking at? So these are the classic patterns I typically look for. So a classic breakout of the open box, maybe after a retest of the VWAP, going to the one full range expansion. So you trade the breakout until the open box 1x. You want to have higher time frames bullish, of course. Then reverse or range, wide open box often, equity open pushes up, then working into the high, fake out high entry, short reversal back to the low of the open box. That was the second one. Third one, parabolic reversal, as I call it. An explosive breakout. You might not take that if you are in a bearish situation, for example. Then the open box 1x gives a reaction. And then you maybe have a level here also. Take an aggressive short here, or you wait for price to come back into the open box and then you short it from here, maybe to the low of the open box or even into range expansions to the other side. What are the major trading rules I have for trading the open box? First is you really need a thesis and a plan beforehand. We don't trade only the open box, but we have a thesis from the higher time frames. Then we will be open as the open box prints. We always consider a breakout, fake out, or a ranging scenario. We never predict. We really observe patiently and let the market show its hand. The size of the open box range gives a clue. If it's wide, it might do a fake out and range. If it's narrow, it might be parabolic and go into range expansions. The breakout needs a parabolic setup, and often it comes back and retests the VWAP to go on. So if you want to have a safe trade, you wait for the VWAP to be retested with a trap in the other direction, and then you enter the trade. If you trade a fake out, you preferably wait for a price to cross the VWAP again, and often it revisits the open level. And then you might go to the other side. Always wait for the trap. That's very important, as discussed in one of the last episodes. And then the classic target, once you really break out, is that you go to the one full range expansion of the open box. Backtest that. You will see it's amazing how well this works and how often price just goes to the open box 1x and then turns around. Takeaways. The equity market open is very volatile and often traps traders on both sides. So the best approach to trade that is to be patient and to wait for this insanity to cool down. You wait for a third hour and then you are fresh and prepared for the real move. And then open box indicator, trend predator open box gives you the structure to really see what's going on. This whole process helps you with patience and then especially with your entry and also with your target and trade management. The goal is to be the predator that waits for this moment to strike and not be the prey that is destroyed with the open. If you're interested in Trend Predator Open Box, just follow this link or check the description box.